Hello, everyone, and welcome to the Robin Report and Placer.ai webinar. I'm Shelley Cohan, and I'm the executive producer for the Robin Report. And today we have a very familiar and popular guest joining us from Placer.ai, Elizabeth Lafontaine, who is the retail strategist and director of research for Placer.ai. So welcome, Elizabeth.
Thank you. Really excited to be here.
Well, I love having you here because you're an expert in the field of retail strategies. And my favorite thing about you is that you are a true retail warrior, having worked across many retailers and functions at Saks and Macy's and Steinmart and NPD. And then you went to the other side, the dark side. No, it's not really the dark side, but the retail tech side of the business, which means you truly understand the art of science and retail. So it's great to have you here today. You are going to be reviewing the 2025 trends, what's happening in the first quarter, and you're going to enlighten us as to what we could be doing as retailers and perhaps telling us more about what you're seeing in the market. So let's jump right into content and I'll turn it over to you.
Amazing. Thank you so much. Really excited to be here today and to talk about all things retail and where we are this year. It has been a crazy year for many of you, as I'm sure it kind of hasn't been across the industry. So let's get started. So we're just to kind of preview what we're going to talk about today. So I'm just going to introduce myself and Placer, who we are, what we do, what kind of data and insights we can provide. Then we're going to really talk about where we are right now in the retail industry in 2025, sort of all the trends that we're seeing across consumer visitation, what we're seeing in the essential side of the industry, the discretionary side of the business, and sort of what are the key underlying factors that are impacting what's going on right now. Then we're going to talk about sort of some of the overarching trends that we're seeing that might impact this year, kind of some things that are emerging, one of the kind of key things we're going to talk about today is where we are sort of in the 5 years post the pandemic. And so we're going to kind of look at some of the trends that have lasted over the last 5 years, some of the things that we've seen, how consumers have transformed, and sort of what we need to be thinking about for the remainder of this year, as well as sort of into next year too.
Sounds like an
So
action-packed agenda. And I just want to mention on the Q&A, if you have questions as we go through the webinar, if you can just pop those into the Q&A, and we'll be, like Elizabeth said, we'll be handling all the questions at the end today.
perfect. So just to kind of give you a little bit of background of who we are at Placer.ai, what we do. So we are a foot traffic analytics company that is powered by mobile data. We provide insights on traffic movement around physical places in the US, including places like shopping centers, retail locations, restaurants, theme parks, hotels, municipalities, and basically anything you can draw a box around, we are able to get foot traffic estimations for. And we do this by leveraging a panel of tens of millions of devices, and we utilize machine learning techniques to make estimations for visits to locations across the country. And our company and our products are built with a privacy by design approach. So really what we're able to do is tell the full story of any location. Specifically today, what we're going to talk about is retail. So we're able to understand things like visitor journey. So where devices are visiting before and after they go to a retail location. We're also able to look at things like trade area cannibalization. If a retailer is looking to open up new stores, we want to make sure that they're opening those locations in the right places for their consumers, and also looking at the competitive market of that specific area. We're also able to work with third-party data providers to layer additional data sets on top of Placer's foot traffic estimations. So we're able to quantify things like demographic and psychographic information of an area to really understand the who of what visitors are visiting at any given time. We're also able to look at different things like visit frequency and understand and estimate the effectiveness of ad campaigns and marketing campaigns for various retailers. There's so much that we can tell beyond just what time people are visiting, when they are visiting, and how many people are visiting. So with that, we're going to get started on really setting the stage of what's going on in retail in 2025. And I think if we had to kind of put everything into one word for 2025, it would be uncertainty. And what we're going to see, and we're going to talk a lot about today, sort of where we are 5 years post pandemic and sort of where we've been over the past 3.5 months. And some of those things look wildly similar, and some of those things look really different. But I think kind of the underlying thing, if we're thinking about uncertainty, if we go back 5 years to the onset of the pandemic and sort of where we were in that initial lockdown phase, there was so much uncertainty in the retail industry as we had to shut down all of our physical retail locations with the exception of essential retailers. We were really unsure as an industry of how the consumer was going to face some of these challenges. Were they going to be resilient? How were their spending habits going to change? How were they going to interact with physical retail in the future? And we've had sort of 5 years to understand the impact of all of those things on consumers. And I think if we had to come to really one key learning, it's that the consumer is incredibly resilient. And I think as we look to 2025 and a lot of the economic uncertainty and changes in consumer sentiment that we're seeing right now, I think we do have a lot of positives and there's a lot of optimism that we can still take when we're thinking about how consumers are changing and really their resilience going forward. So with all of that said, let's kind of jump into a long-term view of what's been happening over the past 5 years when it comes to consumer visitation to retail locations. So here what we're looking at is really kind of a baseline benchmark. So we're comparing monthly visits from 2019 through February of 2025, but we're comparing that to sort of a baseline of January 2019. And we created an index here for 100 retail and restaurant chains across the US to kind of give us a good estimation and baseline of what's going on in retail. So what we can see is that we're actually seeing visitation not only increase since kind of the peak pandemic period, but we're seeing it kind of steadily grow year over year. And that's been a really good sign for the health of the retail industry overall. And certainly there's a lot of stories and trends that are contributing to this. But if we're kind of thinking overarching over the past 5 years, one of the things that we're seeing certainly is we've continued to see store and unit openings across the retail industry. And we're looking at this in totality. So we're not breaking out comparable store visits or anything of that nature. So certainly we're seeing that retailers are continuing to invest in opening new stores and expanding their fleets, which has certainly helped visitation trends. But we've also seen, I would say, a renewed demand for retail. I think one of the things that really came out during the onset of the pandemic was that consumers turned to retailers as a source of comfort, as a source of kind of hope in the early days of the pandemic. Essential retailers provided something to consumers beyond just fulfilling their basic needs. It was a place where they could escape their home for a few hours, where they could go and stock up, where they could find comfort. And I think the retail industry has really become a strong partner and built that relationship with consumers over the past 5 years, where this is a really symbiotic relationship between retailers and consumers, more so than it was in the pre-pandemic period. We've also seen a lot of changing consumer behavior that's contributed to a lot of these trends. One of the things that's kind of been a lasting impact is we've seen consumers shop a higher frequency of locations than they did before the pandemic. So, where they're shopping a wider number of retailers, they're going to more stores throughout the week to do their weekly shopping trips. And that's really benefited the industry overall. Not only has it increase the number of retailers that are kind of being open and accessible to consumers, but it's really kind of blurring the lines between the lanes and the silos of different retail brands. And that's created, I think, a really good environment for the consumer, although it has increased competition across the board as well. And I think kind of the final learning that we have to take away from this is that physical retail continues to be incredibly meaningful to consumers. I know for myself, as I'm sure a lot of you, when discretionary retailers had to shut their doors in April of 2020, there was a lot of questions about how a lot of that behavior that we saw from consumers was going to shift online. Were we going to see e-commerce adoption skyrocket? We did. But we also saw that once those store locations were able to reopen, over time, consumers have gone back to physical retail. It is a huge part of the retail economy here in the US. Retailers are continuing to invest in improving and expanding their store fleets. And overall, the physical retail world is here to stay for consumers. It is something that brings them great experiences. They are able to still find convenience in shopping physical retailers, even with the e-commerce channel growing at an exponential rate. And we've been able to see that stores really are important to consumers, which is really ultimately what we've wanted to see.
I really don't think you can underestimate the power of socialization of shopping. And like you
Yes.
said, this idea of getting out there, and it's kind of fulfilling a need in our culture.
That's such a great point. And even one of the kind of learnings that we had from holiday 2024 was the power of malls. We saw this huge increase in visitation over Black Friday weekend of indoor malls specifically. So I think if we're thinking about things that we thought would kind of die 5 years ago, or maybe not live to see a new life, if we're thinking about malls and indoor shopping centers and some of these places, we're starting to see that renewed socialization of shopping. We're starting to see people wanting a third place, which we're certainly going to talk about later on in the presentation. And retail has really kind of set itself up to be that for consumers, which is great. So now we're going to talk about what's going on in 2025. And this is where things are going to get slightly doom and gloom. But again, I want us to approach what's going on in 2025 with a sense of optimism, because if there's one thing we learned from the last slide, it's that consumers can be incredibly resilient. And they find a way to engage with the retail industry no matter what is going on in their lives. Retail provides it provides joy, it provides a place for people to connect, it fulfills needs for people, and that is not going to go away despite a lot of the uncertainty and headwinds that the industry is facing right now. So what we are looking at here is the year-over-year change in weekly visits for 2025 so far, so basically through the end of Q1. And we started to see early on that we certainly were seeing a slowdown in visitation across the industry pretty early on, mid-January, and that has really continued throughout the end of March. And one of the things that I also kind of want to call out here, and it's going to become even more apparent as we go through the next few slides, is that there is not one causation of what is going on in the industry right now. There are a lot of different factors that are impacting both the industry as well as the consumer that are contributing to these declines in visitation. So the first one that I kind of want to talk about is this idea of a holiday hangover. So one of the things that we started to hear from retailers in our conversations with them, as well as kind of seeing in our data, is that as people had really put a lot of time and energy into holiday season of 2024, once they started to see those credit card statements, once they kind of got through the middle to end of January, people started to have to pull back a little bit of their demand and their need to visit retailers because of kind of a lot of the damage that had been done in holiday season of 2024. There's also certain weather events that have happened across the country. We've had a extremely snowy and cold winter in the Northeast as well as the Midwest. We've had tornado and hailstorms and things coming across the country, particularly in March. We also had the Los Angeles fires that happened in the second half of January that impacted that area. Another thing we had was a shorter February. We also had an Easter shift from March to April. So as we get into sort of the April time period, we'll be able to see if we saw a little bit of lift there. But certainly, kind of, I think the most underlying factor here, and the one that everybody is kind of talking about, is economic uncertainty. We've all seen the consumer sentiment reports. Consumers are not feeling great about what's going on right now. There's certainly a lot of uncertainty in terms of what the economy is going to look like in the next 3 to 6 to 12 months. And that is ultimately what happens with consumers when they're feeling uncertain, is they want to protect themselves. And that means that they are going to shop a fewer number of retailers, they are going to visit less frequently, and they're going to try to protect their money where they can. And so I think as consumers are kind of grappling with just a lot of uncertainty going on right now, they're certainly trying to be more calculated in their retail decision making. They're trying to make sure that they're getting the most benefit out of those purchases, deriving as much value out of their retail experience as possible. And that is a trend that is going to continue throughout 2025.
So, Elizabeth, I have to ask you this question. I'm sure you may not want me to ask this question, but I'm going to go for it. I'm going to ask you anyway because it's on top of mind with everyone sitting on the call. And so tariffs. So when I look at this graph and I see, oh, interesting. A lot of the declines are coming about the time that we've been announcing these various assorted tariffs and then taking them back and then putting them out. So I just want to know, do you have any perspective on the impact that the news and the tariffs and all that is having on visitation?
Yeah, that is a great question. And certainly, I'm sure all of you are thinking about it, and we are as well. One of the things that we've continued to do is monitor what is going on in the industry. And we know that there will be both short term and long term impacts as these tariffs are rolled out. One of the things that we've done actually is we work on Placer's Content Hub is called the Anchor, and our team, the analytical research team, is constantly publishing what we call executive insights as kind of our take on what's going on, our perspective on trends in the industry. And the head of our team, RJ Hodavi, actually published an article a couple weeks ago, really focusing in on the potential impact of tariffs, how we can think about it with beyond different industries, how they might look for different industries, how they're prepared, some of the short-term and long-term impacts. I would highly recommend going to check that out. It really provides a lot of our perspective on where we think things are going to go. So, kicking off, we're going to kind of look at the business from a few different angles. So, we're going to look at it first from the essential side of the business, and then we're going to get into more of the discretionary side. So here we're looking at the year-over-year comparison, and this is looking at monthly. So we're kind of blowing this out a little bit more into kind of the midpoint of 2024 and then looking through Q1 of 2025. And this is looking at the change in monthly visits across grocery, superstores. So here we're defining that as mass merchants and then dollar and discount stores as well. So kind of the key thing that I think is a positive from this is we're still seeing a lot of momentum in the grocery space in particular. And this is really being driven by value grocers. So think about chains like Trader Joe's and Aldi. They're continuing to do a fantastic job at messaging value to the consumer. I think one of the things, and we're going to see this come up a few times in the presentation, is as consumers are becoming even more price conscious, we know they're incredibly price conscious right now. They are most likely going to become more price conscious in the next months. That retailers that can offer inherent value as well as private label products are really well positioned to do well with consumers right now. So in the grocery space, those value retailers and anybody who has a strong private label program is really well positioned to really message that value to consumers. And we're seeing that they are price sensitive across most essential retail categories right now, but grocery has kind of been the space that has seen a little bit less softness in their visitation overall throughout 2025. The other thing I think we have to think about here is what's happening to lower income consumers because their ability to spend is becoming even further constrained. So when we think about the declines that we're seeing in dollar and discount stores, some of that is because we're comping store fleet closures that happened in Q2 of 2024. But we're also seeing there is that consumers that have traded down from potentially being a superstore shopper into a dollar and discount shopper, they're becoming even further constrained and they might just be pulling back on their demand overall. And one of the other trends that we kind of talked about that really kind of started during the pandemic that we're starting to see slow down a little bit is that frequency in the number of retailers visited. So consumers were really casting a wide net. They were willing to shop a lot of different retailers to try to find the best value, to try to kind of curate that perfect assortment for themselves. As they're becoming a little bit more uncertain, there is the potential that they are going to start to pull back and become a little bit more picky and choosy in the number of retailers they're willing to visit and really being specific about the retailers that they are giving their loyalty to going forward. And that's certainly something that we're watching because as consumers are still focused on essentials, they want to make sure that they're shopping retailers that sort of align with what they're trying to get out of their retail experience right now. So, one of the areas of the industry that is kind of really going against what we're seeing from the industry at a total perspective is warehouse clubs. Warehouse clubs have continued to perform very well as we've gone throughout 2025 and specifically through Q1 of 2025. And Costco has really been a winner here, as well as Sam's Club. And one of the things that we're really seeing is as consumers are becoming even more laser focused on value, the warehouse clubs are doing a really good job of messaging that value to consumers, that consumers are a little bit more incentivized to shop in bulk right now, that they're looking to stock up on things, they're looking for different value, and there's this changing consumer perception that is really kind of pushing consumers towards warehouse clubs right now. Again, we kind of talked in the last slide about private label offerings. This is something that Sam's Club and Costco do exceptionally well and is really, again, with that value orientation that consumers are looking for. The other thing that has been a trend that we started to see in 2024, and is certainly, I think, going to carry over into 2025, is we're seeing a lot of younger shoppers being attracted to warehouse clubs. So think about those in the millennial and Gen Z generations. As those consumers are kind of shifting into more family formation life stages, they're joining clubs at a higher rate than any other generation. They are contributing to the growth in store visits as well as store sales. And they are really the ones that these warehouse clubs are courting right now because of the potential demand that they can generate.
Yeah, Costco is interesting because it was one of the companies that really stood up against some of the backlash and pushback on DE and I. So it's really interesting to see how it has not. It's actually, the visits are going up at Costco, but they've done a
Yes.
great job with deepening the value with their customer base by offering ancillary services. So they're not just selling, not transactional, product for money. They actually have a lot of different services. And lastly, their product assortment. When you talk about this younger generation, the quality, the value quality at Costco is just, it's unbeatable.
Yes, definitely high quality, high value to your point with all of the services. If we think about things like auto detailing and travel and tourism, all of these services that they're able to offer their customers so that they are getting inherent value out of that membership cost on a yearly basis, that's something that has really helped kind of skyrocket their potential and really the affinity that can and the loyalty that consumers are willing to give to them. So I wanted to hone in a little bit further on dollar and discount because this has been a really interesting kind of sector of the essential retail side of the business over the past 5 years. So here, what we're looking at is essentially the share of visitation by each of these sectors from Q1 of 2019 through Q1 of 2025 on a quarterly basis. And I think that this is really interesting because one of the things that we're able to see is how are consumers reacting to each of these sectors? How are they valuing them? Because we know that when consumers go to choose a retailer that they're going to visit, they're not necessarily thinking of them in silos. They're not thinking, oh, I'm going to go to a grocery store, I'm going to go to a mass merchant. They see them kind of all as one entity and they're choosing the individual retailer a lot of times. So, one of the things that's been really interesting is to see kind of this shift in share over time and how certain sectors have been able to gain market share, particularly when we're looking at dollar and discount chains. They started out at about 12% of visitation in Q1 of 2019. They're ending at over 14%. So, they've really done a good job of capturing a lot more of that share of visitation from consumers. And they've done this through a lot of different things. One is just store openings overall. We talked about the fact that they've really expanded their fleets. They've expanded into new, more rural areas, which has been really good to give those consumers a variety of different retail options. They've also really worked hard across a variety of chains of adding a lot more grocery items in there. A lot of what all of these stores are competing on is grocery at the end of the day. And so for dollar and discount stores to become more competitive, they've had to really lean into the grocery side of the business. And that has really benefited them in terms of kind of shifting consumer perception and drawing consumers to their stores. One of the things that we've seen, and you can see here on the screen too, is we've also seen this at the expense of drugstores and pharmacies where dollar stores have come in. And when you think of sort of the front of the store, they've done a good job of pulling consumers away sometimes where drugstores and pharmacies haven't been able to kind of continue to capture that demand, even after the rollout of the vaccine sort of helped them to capture more visitation during the pandemic time period. The other thing here is if you look at the share of visitation to superstores, you can see that we've actually seen a decline in the share for those retailers specifically. And that's partly because of the growth of value grocery as well as the growth of dollar and discount stores, which have really become a prime competitor for superstores and mass merchants across basically over the past 2 years. So, the last thing that we're going to talk about, sort of in this upfront section, as we're sort of getting a baseline of what's going on in 2025, is what's going on with discretionary retail. Because one of the things that we had observed in 2024, and we saw visitation growth across the retail industry in 2024, but one of the things that we started to really see was the rebound of discretionary industries. And we really saw consumers starting to give these industries a second look, starting to be a little bit more excited about returning to them. And we really started to see sort of the deceleration of declines and started to see kind of this slow, very slow rebound across many of the discretionary categories. So it's really interesting as we think about where we are in 2025 because we had a consumer that was really, there were a lot of tailwinds for these industries. Consumer affinity was growing. And now we're starting to see that as consumers are facing economic uncertainty, a lot of times these are the categories that consumers are going to leave first. They're going to be a little bit more picky about the types of products that they're buying. They might be foregoing purchases altogether. They're really being discerning about how they're going to interact with discretionary retail going forward. However, there are a lot of bright spots and I think a lot of momentum that some of these areas have that will carry over through the rest of the year. So when we think about consumer electronics and home furnishings, there's a lot of headwinds, but there's also some tailwinds. We are, as we talked about, 5 years post-pandemic. And in kind of the peak pandemic time period, that's when a lot of people invested into outfitting their homes, redecorating, setting up their home office, or buying that new TV that they'd been looking to invest in for a few years. We're now coming up on the 5 year mark, which really is sort of the replacement cycle for a lot of these items. Potentially the decorating that they did in 2020, now they want to do something else, or that TV that you bought in 2020 now might be time for replacement or an upgrade. There are a lot of tailwinds in terms of consumers kind of entering that replacement cycle that could really benefit a lot of these retailers and kind of counterbalance some of the economic uncertainty that we're seeing there. Another interesting part of the business is beauty that we always kind of want to talk about because as you can see on this screen, beauty had really been sort of the outlier in terms of discretionary retail performance as we exited the pandemic. Because for a lot of people, even as we were facing inflationary price increases and consumers looking for value, beauty was a great alternative for them because they could get back out of their house, they could enter daily activities, and invest in themselves in a small way. And we saw a lot of beauty retailers like Ulta really benefit from the growth in both the prestige and the mass sides of the business. But now we're starting to see throughout 2024, and as we get into 2025, a true deceleration of the growth and visitation of that sector, particularly. There are some certain outliers now, Blue Mercury, which is the sort of high-end niche part of the business that's owned by Macy's. They're still doing incredibly well. But we started to see kind of softness in the Ulta business and sort of across the channel that is certainly, I think, telling for consumers that are so focused on value. And kind of the last one that I want to call out is apparel. And we're going to talk about apparel up next in the next section. But apparel has been really interesting because 2024 kind of signaled, I think, this shift in momentum for a lot of our legacy retail brands. So if we think about Old Navy, Gap, Abercrombie and Fitch, there's a real renaissance happening with all of these brands that is really exciting because consumers are certainly changing the way that they're shopping for apparel. We're going to see that on a few slides from now. But I think starting to see this resurgence of legacy apparel brands is something that is going to continue to be a tailwind for the apparel category, even as we're seeing potential pullback in demand.
So, Elizabeth, before we move to the next section, if you could just clarify a couple terms. So, one of our listeners is interested to know in this discretionary retail slide. I don't see it, but if you can confirm, is home improvement part of discretionary retail?
Yes, home improvement would be. We don't have it listed out on this slide specifically, but a lot of times when we talk about these types of things, we'd also include home improvement, which I'll say that when we're talking about the replacement cycle, we've also started to see that was benefiting home improvement towards the tail end of 2024. But 2025, they're certainly facing a lot of the sort of economic uncertainty that we're seeing impact a lot of other categories.
Great. So, not on this slide, but you do consider it discretionary, right?
Yes, yes.
Okay, great. The other thing is if you could just clarify how Placer AI determines discretionary versus non-discretionary.
Yeah, that's a great question. I would say that it's kind of a loose definition. We tend to think about discretionary as something that a consumer would consider more of a need as opposed to a want, something that they're using disposable income for, as where essential would be thinking about groceries or CPG items or things of that nature. Obviously, we consider mass merchants more essential. They do obviously carry a large portion of their merchandise that capture discretionary spend as well. And certainly warehouse clubs are a part of that too, but that's kind of the loose definition between the two.
Great. Thank you.
Of course. So now we're going to shift a little bit and sort of talk about some high kind of overall trends that we're seeing in 2025. And this is really kind of, these are more of those slower momentum trends where we're starting to see them, start a few years ago and they've really carried into where we are now. And a lot of these trends that we're going to talk about are things that really started because of the pandemic. They might have been spurred by the pandemic, but they've sort of had a life of their own since then, or they've carried on, or they've tapered off. But I think it's really important to think about as we kind of talk about, again, this general uncertainty with the consumer, thinking about consumer resilience and the ways in which consumers have evolved over the past 5 years, I think is really telling in how we as an industry need to think about consumers over the next 5 years and sort of think about their resilience in different ways. So, the first two slides are really going to focus on this idea of wellness. And that obviously is a really broad strokes term that can take on many different meanings. But one of the things that we've really seen, particularly in 2024 and 2025, is this continued focus on health and wellness with consumers. And a lot of that is spurred by the increased usage and availability of GLP-1 medications. But it's had a lot of cascading impacts across the industry. So what we're looking at here in particular is the fitness industry. So these would be your traditional gyms, these would be kind of lifestyle gyms, fitness classes, all of those things. And we're looking at the year-over-year change in monthly visits. But one of the things that was really interesting was that we did see one of the things at the onset of the pandemic, when everybody bought a Peloton, there I think were a lot of questions about if we'd ever see consumers return to a gym, if we would ever see consumers not work out at home. And it's been really interesting because this was a behavior that did not stick for consumers. They bought the Peloton, they might have used it for a year, then they never stepped foot on it again, and now it's sitting as a clothes rack in a lot of people's bedrooms. Where we actually did see this return to in-person fitness, whether that's a class or a gym or one of these more lifestyle centers like a Lifetime, we did see consumers really return to that behavior. And I think part of that is socialization. Part of that is kind of building community and building a routine for themselves, but it's also accountability. And we have kind of seen this growth in visitation decelerate throughout 2024, but we're still seeing growth compared to a lot of areas of the retail industry where we're starting to see declines. But I do think this continued focus on health and wellness, but also this consumer demand for community and socialization and looking for a third place where they can really go and connect with others has really been beneficial to this industry. And as we think about changes with consumers, sometimes consumers change for a little bit and then they revert back to old behaviors. And this is certainly kind of an example of that. So, another kind of health and wellness adjacent trend, I would say, is looking at the athleisure market. Now, this is a trend that we saw sort of hit during the time period of the onset of the pandemic, where consumers were really looking to be comfortable. They were working from home. We saw more people work from home than had ever previously done so before. And with that, the athleisure market really took off. And at the same time, we also saw a lot of new entrants into the market over the past 5 years. If you think about brands like Alo Yoga and Viore and a lot of these others that have done a really good job at both challenging the dominant player in the market who had been Lululemon, but also creating new opportunities for consumers to engage with this category that they might not have had before. And at the same time, if we're looking at business apparel, we have seen certainly the return to office. We've seen a lot of consumers go back in a hybrid format. Some people return to 5 days a week. But we have not seen it return to kind of that 100% level that we'd been at before. And we've also seen the overall casualization of American fashion over the past 5 years, which has really been a lasting trend. If we think about not only athleisure, but if we think about the linen market and boxer pants and all of these things and sweatpants that have become a huge trend across the fashion industry, we're really seeing this casualization of culture that has changed how Americans kind of interact with the apparel category overall, which has been a real lasting trend.
I think the other thing that's really impacted this is the athleisure companies were very smart and started developing business like,
Yes.
apparel that
Uh-huh.
people could wear to work. So they kind of stole part of that market.
Yeah, that is very true. And I think that they started to see this as a not just something for working out, but a true kind of lifestyle product that people are looking to just be more comfortable in every facet of their lives. And this is really kind of just another underscoring point of that long-term trend and really how it's impacted the industry. So, one of the other things that I've kind of talked about and alluded to throughout the presentation so far is that we've seen consumers since the pandemic shop a wider variety of retailers, that they're willing to go out of their way to visit this specific retailer because they might specialize in a certain category or they have a service component that consumers like. So we know for certain that consumers are visiting more retailers than they had been before. But one of the things that we also saw throughout the kind of post pandemic period is that consumers are spending less time in those stores. They might be going to more stores, but when they're going to those stores, they are spending less time in them than they were in the pre pandemic period. So, if we're looking at particularly superstores, so both mass merchants as well as warehouse clubs, we can see that compared to 2019, that the share of visits under 10 minutes continues to grow year over year. And part of this is that I think one of the behavioral adoptions that we saw during the pandemic was use of things like BOPUS and curbside pickup. And retailers have really heavily invested in a lot of these technologies and services to make it easier for consumers to get in and out of the store very quickly. But we've also seen retailers with staffing shortages, with products being locked up, that have not necessarily made the store and shopping experience in store easier for consumers over the past 5 years as well. But what we are seeing is that consumers are going to more retailers, but they're spending less time in them. And this is true across the board, both on the discretionary side of the business as well as the essential side of the business. The consumers are just not willing to essentially browse for as long as they were in the pre pandemic period.
This is really interesting to me, and I think that when you talk about this shorter visit, that it to me is like a big wake up call for a lot of the retailers, because if you don't have an integrated shopping experience that is performing flawlessly, you're going to lose these customers. And I'm sure you'll agree, because I know how much you love data, Elizabeth, but the data and personalization has just become so much more important, targeting promotions and to get that conversion increased more quickly. I mean, do you have any other suggestions or ideas on, what can retailers take with this, golden nugget that you just gave us?
Yeah, that's a great question. I think that this is sort of one of those moments where, when we think about the future of retail media and the future of retail media in store, this is kind of a key insight that can really underscore the importance of that, because you have a lot less opportunity as a retailer to capture the attention of the consumer and convert them to a purchase. And if you're a CPG brand working with a retail media network, in-store retail media solutions become even more important, because you have a very short window of opportunity to capture the attention of that visitor. And so making sure that your products are being featured to consumers in a way that is easily consumable is really important. I think this also is going to create even more competition between types of retailers and between types of retail sectors, because consumers are willing to go in and out of somewhere really quickly and move on to the next place. So again, it's really this fight for attention. It's not necessarily always driving people to convert, but it's getting people in the store and trying to keep them there as long as possible. So we're going to talk a little bit about apparel again, but we're going to look at it from a different perspective. So one of the kind of key trends, and apparel has had, I think, just to underscore all of this, apparel has had an incredibly challenging 5 year run since the onset of the
Oh,
pandemic. They were the retailers that, shut down in April of 2020, and we really didn't know what was going to happen to those chains going forward, because they had such an uphill battle to climb to kind of gain back their position with consumers. One of the things that we've really seen over the past 5 years is just a shifting and a change within the apparel category. And that's really been driven by the increase in penetration of the off price channel, as well as increased consumer affinity for thrifted apparel as well, particularly over the past 2 years. And I think when we think about this, kind of, I think the overall message is that consumers are really focused on deriving as much value out of their retail experience as possible. And that doesn't necessarily always need to mean that they want to look for the best sale or the lowest price when they're going in the store, because the store experience still matters to consumers. I think we talk a lot about experiential retail in terms of how retailers are trying to innovate going forward, but sometimes it's just about creating a good experience in retail for consumers. And the off-price channel and thrift channel as well have done a really good job of creating a retail experience that consumers want and really creating that treasure hunt element where consumers want to go in weekly because they don't know what they're going to find, or they want to go and peruse and try to find a unique item or something that is exciting, or they're on social media and they see that something might be at one store, so they're trying to see if it's available in their local market. There's so much kind of reason to visit for both off price and thrift that has done a really good job of capturing the attention of American consumers. And I think as we think about the industry going forward, creating retail experiences that create this sort of must visit element or a need to return over and over is incredibly important for the sustainability of the industry going forward.
Definitely. And I'll add one more factor into the shifting apparel landscape, and it's the $680 billion elephant in the room, which is, Walmart fashion, which has really done an incredible job. And I think a lot of our consumers, that value-based consumer set, are really turning to Walmart and seeing Walmart more as a fashion brand, more so than they ever have before.
That is a great point too, that mass merchants, as we talked about, they're half essential retail, but they're also, especially when we think about Target, so much of the business that they're doing is in the discretionary side. If we think about clothing, shoes and accessories, beauty, all of these different things. And both Walmart and Target have really become much more fashion forward. They've become kind of trendsetters in their own right at creating, and they've really done a good job of going up against the fast fashion guys like Zara and H&M, those different players. And so I think the apparel industry has also gotten even more fractured, and that's really where everybody's trying to kind of fight for their piece of the pie right now. So one of the things that I think is really interesting as we think about 2025, and again, one of, I think, the reasons to maintain optimism is that we talked about this with fitness studios a little bit, but I think one of the things that we're seeing is that retail as an industry is returning to becoming a third place for consumers. So if you're thinking about the third place, typically the definition is someplace where a consumer can go that's outside of work and home, where they can spend time and kind of leisure. And I think retailers, for a lot of people in the millennial generation and Gen X, have done, it was really, the mall was that place where a lot of people were congregating there. They were spending a lot of time there. And retail for a long time really was this third place for consumers. We really got away from that over the past sort of decade. And that really culminated in the beginning of the pandemic when a lot of discretionary retailers were closed. But what we started to see, especially over the past year to year and a half, is that retailers specifically, as well as indoor malls and some other kind of lifestyle shopping centers, have started to kind of become a third place again for consumers. And consumers are really rewarding them with increased visitation. So a prime example of this is Barnes and Noble, which, if you ever thought that Barnes and Noble would be a retailer that still existed today, that was doing very well, growing their visitation year over year, but also a retailer that's kind of being very innovative in how they're able to keep consumers in the store for longer, that's probably not a conversation any of us thought we'd be having 10 years ago, especially because books was the first category to be disrupted by the e-commerce revolution. So the fact that we still have a physical retailer that's doing well, that is capturing share and is capturing kind of the ethos of what consumers want in a retail experience right now, I think it gives us a lot of hope that multiple types of retailers can become a third place again for consumers. So with that, we're kind of going to close up everything. And again, this is looking sort of the same view that we showed at the beginning of the presentation, really just looking at where we are year over year change in monthly visits from basically over the past year. And I think what we can see is that the retail industry, particularly in Q1 2025, is facing a lot of headwinds. We know that there's a consumer that is uncertain about what the future holds, and they are trying to protect themselves and their wallets as much as possible. But retailers, I think, if we're thinking about kind of all the trends that we've seen since the pandemic, retailers have done a really good job of constantly evolving the way at the pace that their consumers have. And retailers have also done a very good job of staying positive and staying with their consumers, even during times of kind of economic uncertainty and during times of consumer uncertainty. Retailers are here to provide joy. They're here to kind of be a comfort to consumers. They're here to provide the needs and the wants of consumers, and consumers are always going to need retailers, even if that looks a little bit differently over the next 12 to 18 months to 2 years. Retailers need to stay the course with consumers because ultimately those that do will be rewarded in the future. So, with that, I will go ahead and open it up for questions.
That's great. Thank you so much. That was a wealth of information. Oh my gosh. Um, it's great. So one of the questions we have, one of our participants you mentioned something about measuring advertising or promotions in the beginning. Is that something Placer AI does, and how do you do that? And what does that look like?
Yes, that is a great question. Yes, we are definitely able to look at campaign effectiveness. I worked with a retailer at the end of last year to look at the effectiveness of a marketing campaign across a specific market. We're able to really set up different time periods with a specific set of store locations, or if you're looking at national, and we're able to kind of benchmark the changes in visitation that we observe over time, as well as looking at differences in demographic splits or psychographic splits and visit frequency, all of those measures to really understand if you're producing a campaign, is it actually impacting more people coming to your store or set of stores?
Great, thank you.
Of course.
The next question is, can you talk about Target's recent drop in sales and traffic and their DE&I policy? You probably can't speak to their policy, but anything around why Target traffic may have dropped or
Yeah, we have certainly observed a drop off in their traffic. I would say that when you look at the mass merchant channel in general, we've also seen a drop off in Walmart's traffic too. To your point, Shelley, I think that one of the things that we're seeing is that there's never a clear-cut answer on everything, and there's certainly a multitude of factors impacting consumer visitation, but we have seen that drop off, particularly in the mass merchant channel.
Yeah. Another question is about trends with sustainability. Are you seeing consumers that are demanding more sustainability? Are you seeing visits to maybe companies that have that as one of their pillars? And are retailers, in your opinion, responding to these demands on sustainability?
That is a great question. We have not done a ton of sustainability research over the past few months, but that is a great idea for a topic going forward. I do think that one of the things that the industry is facing as a challenge right now is that we have consumers that are, I think, genuinely focused on sustainability efforts and finding reusable products and rewarding companies that are being a little bit more kind of curious in their sustainability efforts. I think at the same time, we also have a consumer base that is so value oriented and trying to find the lowest possible price, looking at private label offerings, that sometimes those two things are at odds with each other. And I think that's an issue that we've had as an industry for a very long time. But I think right now it feels particularly challenging.
Yeah, I think the Gen Alphas are going to help change that mindset
I hope
tremendously. I know
so.
Yeah, I know we said that about Gen Z, and I think the younger side of Gen Z is actually making purchasing decisions. And that's where you see the rise. You in one of your slides, you noted the rise of the resale, thrifting, vintage. That
Mhm.
younger Gen Z is doing that. So I'm hopeful the sustainability will become more and more important and consumers will continue to drive it because it is the consumer that will make the difference in that.
Yes, definitely.
Um, the last question I have, because I know we're running out of time, is on the last slide. If you go back and you're looking at February
Yes.
24 compared to February 25,
hmm
um, is that related to weather? Is this something? What was the drop between the two? And can you ascertain if it's things that are in the environment? Is it weather related? Do you have any I know that's a very specific question to ask you.
Yeah.
You may not have the details, but
So February was kind of again an amalgamation of a lot of different things. I think weather impacts were certainly there. We did see, obviously, we had one fewer day this year than we did last year, which impacted kind of the overall month because you're seeing a day fewer of visitations. The other thing I think that we're seeing here was just general consumer uncertainty as well, that certainly was an impact in this month and really beginning for both February and March. So again, it's not necessarily, and I think that that's kind of the point with a lot of these things. There's not one clear-cut answer. It's sort of a grouping of a lot of different things that we're seeing impacting the industry.
I'll even add in February of 25, we had the change in the White House, and that certainly is going to impact how consumers are thinking and feeling. Whether what side you're on, it doesn't matter. Whenever there's a change in the White House, it might, impact visitations, right after inauguration and all that happens.
Mhm.
Um, and then, of course, I have to ask, can you tell everyone how to find you? How do
Yes.
people find Elizabeth?
Yeah, of course. Feel free to connect with me on LinkedIn. That is usually the best place. I am constantly posting content, what we are publishing at Placer. I'd also highly recommend checking out the Anchor. You can go to placer.ai/anchor. That hosts now all of our different types of content. We have white papers, we have blog posts, we have executive insights, we have different articles. There is stuff being published every single day from a very talented content team that's really trying to keep a pulse on what's going on in the industry. And certainly, too, I sometimes will be at retail events. I'm going to be at the Lead Summit at the end of May, so
Oh,
feel free to try to connect with me then, too.
well, I will definitely see you at the lead. That'll be lots of fun. So
Yeah.
thank you so much. What a great webinar. I can't believe how much data and information you go through so quickly, and you're so good at it. So thank you so much. It's been great having you here, and thank you for all the participants that joined us today. And we look forward to seeing everybody on our next webinar.
Thanks so much.